Very good morning, everyone. How are you all? Bolo. Any doubt about last class? I am very fine. Any doubt about last class? No doubt. No doubt means no revision. Till now you have not started. Correct now? Not you started any question, whatever reference I have given you have not read. Pakka? Not read? When you read? After exam or before exam? Weekend. Weekend in our life there is no weekend. Only weekdays. Don't wait for weekend. I said once again I am saying it requires, revision is required and you can do revision in half an hour only. You are postponing, the volume is very vast, everything will accumulate. All chapters will become accumulation and then it will become heavy. Now, the last point, yesterday we have discussed, we were discussing going concern, but no explanation I have done. Correct? So, whenever means we are talking about event occurring after reporting date. So, this is the date of approval, this is the reporting date, and suppose a fire occurred in the premises of what? This entity only, in the factory or in the building or whatever. Here some natural calamities occur and due to that event a huge loss incurred. So there can be two situations. Either due to this loss entity may able to sustain, means it might happen it is insured. If it is insured, the entire amount will be recovered from insurance company. If it is not insured, it might happen they need to bear the entire loss and they may decide to what? Liquidate. Means there are two options, there are two circumstances. Ki going concern of entity become invalid, your going concern of the entity remain appropriate. Are you getting? So after fire, due to the loss, there can be two circumstances. Either going concern become invalid or going concern remain appropriate. Can I say in both situations, if you think from the point of view of definition of adjusting event and non-adjusting event, this event is non-adjusting event because there was no condition existing on balance sheet date. Are you able to understand? So there is no doubt about when going concern remain appropriate. If the going concern remain appropriate, it is a non-adjusting event and no adjustment is required for this loss in the reporting, in the current reporting period. But when going concern become inappropriate, so what IND AS 10 says, कि even though it is non-adjusting event, it requires some adjustment. It requires some adjustment. However, this would be wrong to say, we should not say adjustment is required. The actual word is what? Ki it requires a fundamental change in the basis of accounting. Fundamental change in the basis of accounting. However, AS4 has used the word adjustment is required. And IND AS 10 has used the word a fundamental change in the basis of accounting is required. When we say fundamental change in the basis of accounting, it means normally we follow going concern. Normally, when everything is correct, we follow going concern, and due to this assumption, our entire assets and liability will be recognized at cost price. We do cost concept, we follow cost concept, so it is recognized at cost price. Or we say fair value. Now, as per IND AS 10, we say fair value. There is a difference between fair value and realizable value. There is a difference between fair value and realizable value. What is the difference? That we'll discuss later on. Are we able to understand? So when we say fair value, when we say realizable value, these two are two different terms. It are two different terms. So right now, whenever we say a fundamental change in the basis of accounting is required, means we follow realizable value approach and all assets and liabilities are restated at what price? Realizable value. And any gain or loss means I'm not saying cost price or NRV, whichever is lower. Means even though NRV is higher, gain will be recognized and it will be transferred to what? Profit and loss account. It means we'll consider this as what? An adjusting event, and on this date, whatever draft financial statement we have prepared, can this financial statement we have prepared on cost basis? On cost basis, draft financial statement was prepared on cost basis. This need to be restated and all assets and liabilities will be recognized at a realizable value. This is known as fundamental change in the basis of accounting. Even though AS4 used to say adjustment is required, then also practically we used to follow what? Realizable value on liquidation. Means yes, from the point of view of wording, there is a difference. From the point of wording, there is a difference between AS4 and IND AS 10. AS4 says adjustment is required and IND AS 10 says fundamental change in the basis of accounting is required. But practically, even though AS4 was silent about fundamental change, then also practically we used to follow what? Same thing. Are you able to understand what I am saying? From exam point of view, you can see there is a point of difference, but practically there was no difference. Are you able to understand what I am saying? Correct. Chalo. Now, why fundamental change in the basis of accounting is required? Why? Because can I say once they have decided to liquidate, this information become very important from user point of view. Because all future decisions are based on current year reporting, and in current year, if they are not disclosing what we have decided to liquidate, can I say then user will take what? Wrong decision based on what? Current year financial reporting. Therefore, this information become very important from the user point of view. Yes, the entity is decided to liquidate. Now, whatever decision you are taking should be based on what? This liquidation basis. Are you able to understand? Therefore, what we have said, if going concern assumption is not appropriate, that is, it become invalid after reporting date, IND AS 10 require a fundamental change in the basis of account. This is the keyword, fundamental change in the basis of accounting. However, IND AS 1, IND AS 10 over. Now, IND AS 1 has given some disclosure requirement whenever an enterprise is not following going concern assumption. So, whenever entity is not following going concern assumption, as per IND AS 1, 3 disclosures are required. Fact, what happened? Fact means what happened. Second, basis of preparing financial statement. Of course, liquidation basis. Basis means now we are following what? Liquidation basis. Liquidation basis. And the last, why the entity is not regarded as going concern. Means you need to give the reason also. What happened? Ki entity is now not regarded as going concern. These 3 disclosures are required. Now, from exam point of view, everyone try to understand. Suppose in exam they have given fire occurred. Yeah, any other event occurred, due to that there is a what? Huge amount of loss. But question is silent about going concern. Ki whether it is affected or not affected, then from exam point of view, we should be always smart and we should write down both the option. If it become valid, then this is the case. If it become invalid, then this is the case. Means from exam point of view, whenever question is not clear about the information, we should give all the options, all the available option as what? Our solution. Understood this point? Correct? Any doubt? Bolo. I think you have understood, because it was same where? In IPCC. Any doubt? You can ask me. Bolo. Write down point number 3 na. Point number 3. Special point we have done 2. Special point we have done 2. That point number 2 was over. Point number 2, 1, 2, 3 was there. That is over now. Now special point number 3. proposed dividend. Proposed dividend. Okay. Already we discussed this point in value added statement. Correct? Now, everyone try to understand कि when this is the reporting date and we prepare draft financial statement, then what happened in the board of directors meeting before finalizing the accounts, means before signing the financial statement, they will propose a rate of dividend. A rate of dividend, equity dividend, correct na? Rate of dividend means equity dividend is proposed. Is proposed. Which will be approved by whom? Which will be approved. This will be approved by whom? Shareholders. Where? In AGM. In AGM. Are you getting? So once it become approved, it become final. We call it, it is now what? Final dividend. So once it become final dividend, it become a liability for the company. It become a liability for the company because obligation arises only at this point of time. Obligation arises means it become an obligating event when it is approved by what? Shareholders. And as per Companies Act, once it is declared and approved, within 30 days it need to be paid. Within 30 days it need to be paid. Means 30 days will not start from proposal. 30 days will start from approval. Have you understood? So can I say once it was proposed, so can I say it was not a liability? It was not a liability. Means as per Companies Act, if shareholders want, the proposed dividend can be cancelled also. Proposed dividend can be cancelled also. Means when it was proposed, it was not a liability. But can I say when it is proposed, everyone, then financial statement is not yet signed by what? Board of Directors. Means signing will be done only after proposal. First proposal, then signing. First proposal, then signing. Means of course it is an event occurring after a reporting date. And this information belong to this year. This information belong to this year. Are you getting? Question arises, should we create a provision of proposed dividend? Provision of proposed dividend. Why? Whether there was a condition existing on balance sheet date. Yes or no? Condition of declaration was not available. Whether the directors will propose or will not propose, that condition was not there. Are you getting what I am saying? Therefore, it is a non-adjusting event. Therefore, no adjustment is required. Understood? Right. Right on. If an entity declares dividend to the holder of equity instrument, after reporting date, the entity shall not recognize it as what? It as liability when at the end of a reporting date. At the end of reporting date. Means IND AS is applicable for which dividend? Which is declared after reporting date, which is declared after reporting date. So in my example, it was declared after reporting date only. So first proposal, then declaration. So it is what? After reporting date only. Correct? Are you able to understand? Now I have used one word to the holder of what? Equity instrument. Dekho, I have not written equity shares. Means equity shares is not equity instrument. Are you getting what I am saying? Sorry. Equity instrument does not mean only equity shares. I can say all equity shares are equity instrument, but they can be more than this. So what is the meaning of equity instrument? What is the meaning of equity instrument? Write down. Refer IND AS 32. Refer IND AS 32. One of the example is what? Equity shares. Are you able to understand? But now, redeemable preference shares will not be an equity instrument. Achha, when I say equity, equity means what? Not only equity shares. Equity means including other shares also, correct? We write equity and liability. We write equity and liability. So we write preference share capital under which head? Equity only. So now redeemable preference shares will not be a equity instrument because that is a liability. That is a liability. So what are equity instrument? Will define where? Under IND AS 32. So we are talking about only equity instrument, means dividend paid to redeemable preference shares is not covered. Is not covered. Dividend paid to redeemable preference shares is not covered because redeemable preference shares are not equity instrument. Now, have you understood this point? So write down one note. You write down by giving a star mark. Key. Any dividend paid or payable to redeemable, write down redeemable preference shares holders are not covered under IND AS 10. Okay, sir? ठीक है? देखो. Then down. However, such dividend, which dividend? Which dividend? We are talking about this dividend. Dividend declared after reporting date. Okay? ठीक है? Such means that. So, however, such dividend are disclosed in notes to account in accordance with IND AS 1 and requirement of Schedule 3 So this dividend which is proposed require a disclosure. No adjustment. Any doubt? ठीक है? This you understood? Easy. No discussion required. Now question arises, everyone, when we disclose, so we'll disclose such proposed dividend under which heading? बताओ. It is not a liability, so it will be what? It is what? It is not a liability, then it is what? Contingent liability. Very good. No, it is not a contingent liability. I know whatever doubt is coming in your mind, I will clear each and every doubt. Even though you will not ask, I will clear. I will cut down that doubt. It is not a contingent liability. It is not a liability. It is not a contingent liability. Are you able to understand? All disclosures are not contingent liability. So when we are disclosing, it does not mean it is a contingent liability. Have you understood? Correct? Because there was no obligation on balance sheet date, how it can be a contingent liability. For contingent liability also what we require? Contingencies existing on balance sheet date. So it is not a contingent liability. Have you understood? Write down if you have doubt about this. So this disclosure is not a contingent liability. This is not a contingent liability also. Have you understood this point? Below. Any doubt? No doubt. Okay. Now, try to understand. There are three circumstances. Case 1. First is what? Ki this is reporting date and dividend is declared during the year. So it become interim dividend. And as per Companies Act, it need to be paid within what? 30 days. Correct? Have you understood? So can I say practically it cannot be a liability? It cannot be a liability. Have you understood? Cannot be a liability. Because it need to be paid within 30 days. Okay? Understood? So can I say interim dividend is not covered by IND AS 10. Is not covered by IND AS 10. Because IND AS 10 cover what? Dividend declared after reporting date, not before reporting date. This point you understood? So on interim dividend, IND AS 10 is not applicable. This point you understood? Case number 2. Can I say, it might happen, everyone try to understand, this is reporting date and this is what? Date of approval, but dividend declared on reporting date. Dividend declared on reporting date. So it is not after reporting date, na? It is not after. So can I say it need to be within 30 days. So can I say if it is declared on reporting date, it will become a liability. Liability, not provision. Once declared, it become a liability. But can I say this is not practically possible? Not practically. I can say theoretically possible, practically not possible. Ki on reporting date, no company declare dividend. Declare dividend. Either it will be what? During the year or after reporting date, once the profit has been determined. Theoretically possible. Why I am discussing? Because in exam question when we will do consolidation, they will give this bakwas point. Dividend declared on reporting date. Practically not possible, but we need to respect our question. We need to respect ICAI. Are you able to understand? So if they say dividend declared on reporting date, it means we need to pass one journal entry. Once again I will say, on this also what? What is not applicable? IND AS 10 is not applicable. Have you understood this point? Why not applicable? Because IND AS 10 deals with what? Dividend declared after reporting date. Understood? Correct? Case number 3, which we have already discussed. So if this is the case, this is reporting date, this is the date of approval, are you getting? And dividend is declared, of course, before signing, somewhere here only. Dividend is proposed, and then on AGM, it is approved. So once it is approved, we call it declared. ठीक है, तो दिस डिविडेंड इज नॉट अ लायबिलिटी, नॉट अ लायबिलिटी एज पर बोलो, एज पर IND AS 10, it is not a liability as per IND AS 10. ठीक है, तो once it is declared, it will be recorded in which year? It will be recorded in which year? In next year, means after reporting data. I am writing recorded when it is declared. Recorded when it is declared. And can I say it also need to be paid within? So if it is paid, so it is also not a liability of next year, correct now? It is not a liability of next year because it will be paid within 30 days. Understood? So these are the three situations I have discussed so that you have a clarity about all this information. Okay? Now, coming to one exceptional point. Point number, this you have written? Point number 4. We have done 1, 2, 3, last special point. Look. Write down. Distribution of non-cash asset to owner. Owner means what? Holder of what? EI. EI means equity instrument. Holder of equity instrument. Why they have written owner? Because it can be what? Other than company also. Other than company. If IND AS is applicable to any entity which is what? Other than company, then also it will be applicable. So distribution of not dividend, non-cash asset to the owner. Have you understood? Correct? So when I say dividend declared, it means what? Distribution of what? Distribution of cash. When I say dividend declared, it means what? Distribution of cash. So can I say when I am saying distribution of non-cash asset, it is also one type of dividend? It is also dividend. I may distribute my profit either in the form of cash or in the form of any asset. In the form of any asset also. Are you able to understand? So many companies declare dividend in the form of what? Non-cash asset also. But there was no accounting treatment for this. There was no accounting treatment of this. Therefore, it was added as an appendix. Appendix means? Write down. It is discussed under Appendix A to IND AS 10. So whenever there is a doubt, they will add some attachment, appendix, for the clarification of that doubt. Appendix A to IND AS 10. Means in exam if the questions come from this point, if you write as per IND AS 10, it is wrong. You write them what? As per Appendix A to IND AS 10. Because this is not a part of IND AS 10. It is just an what? Addition. Yeah, I will say attachment to what? IND AS 10. So what you should write down? Appendix A to what? IND AS 10. Okay? Now what is this? Everyone try to understand. We are talking about entity and owner. Correct? There are two persons. What can be the possible transaction between entity and owner? Let us understand. First is what? Contribution. This is contribution. Correct? This contribution can be either in the form of cash or non-cash asset. Non-cash asset. Have you understood this point? This is contribution. Contribution. Second transaction can be what? Between entity and owner. बताओ. Second transaction can be what? बोलो. It is what? Distribution. Distribution of what? Point number 1, cash. Or what? Non-cash asset. Or it can be combination of cash and non-cash asset. Non-cash asset. Understood? In above also it can be a combination. There can be 3 possibilities. So one is contribution, one is distribution. Okay? If you can see, this is what? One-way transaction. Contribution. Contribution means what? From owner to entity. Are you getting? And distribution means what? From entity to owner. So this type of transactions are known as non-reciprocal transaction. Non-reciprocal transactions. One-way transaction. So contribution, distribution, both are what? Non-reciprocal transactions. Have you understood this point? Whether they can be two-way transaction between entity and owner. Whether they can be two-way transaction between entity and owner. Bolo. Means both are giving and receiving. Both are giving and receiving. Huh? Bolo. Huh, very good. It can be possible transaction. Huh? So it can be what? If I say entity and owner, two-way transaction, so it is sale or purchase or any loan transaction. It is two-way transaction. It is two-way transaction. This is known as what? Reciprocal transactions. Correct? So it can be, so there are 3 types of transaction: contribution, distribution, and what? Two-way. It can be any transaction. So point number 3, this accounting treatment will be as per respective IND AS. Respective IND AS. Means if I am saying loan, so it will be a financial asset and financial liability. So we need to go to IND AS 109. If I am saying sale, so it will be as per IND AS 115. Agreeing? So it will be as per respective IND AS. So we are not dealing this transaction here. We are not dealing this transaction in what? Appendix A to IND AS 10. Okay? Can I say contribution? We are not discussing contribution here. So can I say, one second, appendix A to IND AS 10 is not applicable. IND AS 10 is not applicable for this. Are you able to understand what I am saying? So for contribution, we have IND AS 32. We have IND AS 32. Now what IND AS 32 says, we'll discuss there. Okay? For distribution of cash, of course, if it is after reporting date, so what is applicable? IND AS 10 is applicable. IND AS 10 is applicable. Are you getting? So I will write down appendix A to IND AS 10 not applicable. not applicable. Are you able to understand what I am writing? But whenever distribution of non-cash asset or a combination of cash and non-cash asset, what will be applicable? Appendix A to IND AS 10 will be applicable. Will be applicable. This point you understood? So right now we are discussing about what? This point. Distribution of non-cash asset or combination of cash and non-cash asset to whom? To owner. Understood? These are our discussion point. Any doubt? Any doubt? No doubt? Let us understand this entire concept with one example. I want you react. What need to be done? Suppose you are a chartered accountant, you become, of course right now also you are chartered accountant because every work you do. See it only sign. Only we are doing every work. Bolo yes or no? They got acha, this is chalo take. Every work you are only doing. So let us understand one circumstances I will create. Let's see what suggestion you are giving to me. I am your client. I am your client. Have you understood? Without any fees. Have you understood? So let's see how you are reacting in this situation. So become what? Chartered accountant. Become CA, think like CA and answer. Even though you don't know, you need to answer. You need to answer. Whatever you will say, that will be correct. 90% will be correct. This is my guarantee. But you need to what? Respond. You need to respond. Chalo. Example. There is no question on this given by ICAI. So I am creating one example. This is a reporting date. This is next year. On 15 to 2017, distribution of non-cash asset is declared and approved also, and approved. Okay? So this is reporting date 31st March 2017, and on 15/5/2017 the transaction was settled. The transaction was settled means it was actually distributed. Distributed. So settlement of distribution you can write down. Of distribution. Correct? Understood? Now, some information I'll give. Write down point number 1. Entity declared dividend to all shareholders by giving one. What do you want to give? Bolo? 1 AC. So 1 AC. To each shareholder. ठीक है? 1 AC to each shareholders. ठीक है? Point number 2. Number of shareholders is equal to 100. Will not take more, Baba. Point number 3. fair value, FV means fair value of each AC on 15 Feb 2017 on the date of declaration, 20,000 on 31st March 2017. However, it will not increase suddenly, but to have this point also, it might increase or decrease. I am taking what? Some fluctuation in the fair value. Are you getting what I am saying? So let us take it become what? 21,000, and on 15/5/2017, let us it become what? 20,500. Only for a clarification. It might increase, it might decrease also. But if this is an AC, it will not increase, decrease within 6 months. Within 6 months. Have you understood this point? Okay? Write down. Cost price of AC means at what price it was purchased. Cost price of AC. Let us assume this is the inventory of what? Inventory of this company. So they are distributing inventory only. Okay? So cost price of AC is, let us assume 15,000. 15,000. Okay? So I have given all the information. Now you need to say me what journal entry, what possible journal entry we can do. Okay? Any doubt? So journal entries we are doing in the books of entity means company. Books of company. Batao. First journal entry on 15/2/2017. Batao. We are in which year? We are in 16/17. What journal entry we should pass? Dividend paid and payable account debit. Payable will be debited. Who said? Payable will not be debited. Think and say. You can say also no entry. Declared, na? Declared means it become a liability. Declared means it become a liability, na? Matlab what journal entry? Bolo. If you want to say something. Huh? Retained earning account debit to? Very good. Simple. What is journal entry of dividend payable from Bachpan we are doing? PL appropriation account debit to what? Dividend payable. So the same journal entry. So we write down perfect journal entry. Think and say. Retained earning. Now, there is no PL appropriation account. We call it retained earning. So, in case of IND AS, we will not write PL appropriation account. We write what? Retained earning. Okay? So, retained earning account debit to what? Dividend payable. Dividend payable. But with what amount? With what amount? Number of shareholders how much? 100. To each shareholders how much AC? 1. Into what? 15,000, 20,000. But 15 ki 20? Huh? 20,000. It will be 20,000. What you are declaring? AC. So that will be recorded at fair value only. What is that fair value? Cost price is what? At the time when you have purchased, you have recorded. This is what? Going out. So can I say this transaction need to be done at fair value of what? AC. Have you understood? So batao, this amount will come how much? How much? 20 lakhs. It is 20 lakhs. First journal entry done. Batao, on reporting date 31st March 2017, fair value changes from 20 to 21,000. So whether any adjustment required? Whether any adjustment required? Yes or no? Yes, because actual settlement will be done यहाँ पर. Are you able to understand? We are doing actual settlement यहाँ पर, so this will be based on this fair value. So any adjustment need to be done. Any adjustment need to be done. So it has increased by what? 1000. So that adjustment, but that adjustment will done from which account? Retained earning. Retained earning account debit to what? Liability will also increase. Dividend payable. Dividend payable. So it will be 100 into 1 into 1000. How much? 1 lakh. 1 lakh. So first accounting year over. Correct? 16, 17 done. Now we'll come to 17, 18. Settlement date will arise on 15/5/2017. But once again, some adjustment is required or not? Because once again, there is some changes in fair value, not decrease. So decrease means what journal entry? You only say. Dividend payable. Now your liability decreases. Dividend payable. Account debit to what? Retained earning. Retained earning. Correct? So this will be how much? 100 into 1 into 500 is equal to 50,000. 50,000. Any doubt? Correct? So what is the book value of dividend payable right now? It is 20 lakh 50,000. 20 lakh 50,000. Now we'll do settlement entry. But what will be the settlement entry? You say. Dividend payable. Dividend payable how much? Dividend payable how much? 20 lakh 50,000. To what? To AC. AC means inventory. I'm writing inventory because for inventory we don't write AC account. Nah. We write inventory or purchase account. Either you can write inventory or purchase account. So inventory or write down purchase. But don't write AC. Huh? But how much? How much? 15 lakh. Very good. It will be 15 lakh. But the difference will be adjusted. Everyone try to understand. Don't. Difference will be adjusted in retained earning or PL. Difference will be adjusted in retained earning or PL. PL. Very good. Means batao. Try to understand. If you apply common sense, you can give me correct answer. Correct? So it will be what? It will be adjusted to be write down. This is profit. Profit. Profit how much? 5 lakh 50,000. And this profit will be transferred to what? PL account. This profit will be transferred to PL account. Means this will be treated as what? One type of sale of inventory to whom? To their owner only. So that difference will be transferred to profit and loss account. So actually there are two transactions. One is distribution. One is what? Sale. So the difference of what? Fair value and cost price will be transferred to PL account. And the fair value will be adjusted with what? Retained earning. Understood? This point? Bolo. Doubt? Huh? Why we have not recorded profit in the previous year? Because there was no, यहाँ पर actual distribution does not happen. It was only declared. No. The risk and reward was not transferred on this date. It was a declaration, but risk and reward was not transferred. Means on 31st March, it belonged to what? Inventory only, and it is an inventory. Means IND AS 2 will apply. IND AS 2 will apply, and we need to measure at cost price or NRV, whichever is lower. Because risk and reward has not been transferred. Distribution does not mean that actually risk and reward has been transferred. Because that is only declared. Are you getting?
तो बताओ, if I have declared that I will sell the asset to you, whether risk and reward has been transferred? You only say, we have done one meeting that will what? Sell to this to some person, whether risk and reward has been transferred? You only say, na? So risk and reward has not been transferred. If you have done AS9, so revenue can be recognized only when a risk and reward has been transferred. And try to understand, we have not recorded sale. We have not recorded sale. Sale, this is actually not a sale. So I have not done sale account credit. We have not done two sales anywhere. But this difference became a profit to the company. So the asset whose cost price was 15,000 was distributed at 20,500. So this has become a profit for the company. Try to understand, we are here doing fair accounting. Fair accounting. So distribution part was how much? Fair value. But you purchase at what? Cost price. That become your profit. That become your profit. Understood? So actually I have not recorded any sale. I have not recorded. You have seen whether we have recorded sale. No revenue has been recorded, but difference has been transferred to what? Profit and loss account. So to your doubt, my answer is what? On that date, risk and reward was not transferred. So on reporting date, it was what? Inventory of entity only. Understood? Correct? But very good doubt. Any doubt? On 31st March, of course, we'll apply IND AS 2 on inventory. Right now, I am teaching you IND AS 2. I am teaching you Appendix A to IND AS 10. So, Appendix A to IND AS 10 is not applicable to inventory. If suppose the NRV decreases, so we'll apply IND AS 2 and inventory should be recorded what? Cost price or NRV, whichever is lower. But fair value is what? More than cost price. So that treatment is not required. That treatment is not required. Understood? Correct? Your doubt over? Okay? Any more doubt? No doubt? Chalo, we'll take one more question. The question of what? Combination of cash and non-cash asset. Then what to be done? Combination of cash and non-cash asset. Means, when I am saying combination of cash and non-cash asset, means an option will be given to the shareholders. Either you take cash or non-cash asset. Or non-cash asset. Are you able to understand? Normally this is very popular. You want to take cash? Take cash. Or if you want to take non-cash asset, take non-cash. For example, I said, you take one AC, but it might happen already AC is installed in my home. So what I will do with AC? Please give me cash only. Are you able to understand? So they will always give an option to shareholders. Whatever your choice, you opt for that. So in that situation, what will be our accounting treatment? Once again, you need to think, you need to do by your own. Example number 2. Example number 2. Next year, once again. So right now I will write down also proposed. ठीक है ना? देखो. So distribution is proposed. It is on 15/1. Then on 15/2 it is declared and approved. This is reporting date 31st March. This is 17. And the same on 15/5 settlement. ठीक है? Fair value, same AC, huh? This is AC. Fair value of AC on this date, it is 15,000, then 15,000. अच्छा, I have given 20,000 ना? चलो ठीक है, 15,000. 15,500 and 16,000. The fair value of AC. Okay? But now distribution is like this. One AC to each shareholder or cash of rupees 12,000. Whatever you want to take. Whatever you want to take. So one AC or cash of rupees 12,000. Have you understood? Okay? Now, they have also given probability of cash option. Probability of cash option on 15 Jan 2017, 40%. Then 15 Feb 2017, 60%. Then on 31st March 2017, it is 70%. Then on 15/5/2017, actual. Now it become actual. Actual now. Actual settlement. These are what? Estimated. These are estimated. Correct? Understood? Now it become what? 30% actual. Means if I am saying 40% is cash option, so 60% is what? Non-cash option. It is understood? So if I am saying 40% is what? Cash option. So the balance is what? Non-cash option. Now you will not argue on this because this will be on the basis of estimation. As per discussion with shareholder, they will estimate what? This might be a cash option. So we will not do any argument on this. Why 40, why 50, why 60. Okay? This is a part of the question, part of the management estimation. Okay? Now, what will be the journal entry? Bata. Number of shareholders remain same. Cost price, I need to give na, because I have given fair value only what. So cost price of one AC is equal to, how much I will give? 15,000 fair value I have given. 10,000. 10,000 and number of shareholders as write down 100. Okay. You need to give me journal entry. An amount. The first is 1617. The date is 15 Jan 2017. But the what journal entry? No entry. Entry? No entry. But whether you require my help, you don't require my help. No entry. Correct? So on the date of proposal, no entry. Because no liability, no obligation arises. Okay? But then, on 15 Feb 2017, journal entry I will write down, amount you will give me. Retained earning, account debit to dividend payable. Can you give me the amount? Dividend payable. $12 lakh. I will assume you are doing correct. 12,60,000. Everyone getting this answer? Let's see. Batao. Cash option. How many shareholder? 100. How many will opt? 40%. Into what? Into what? Into 12,000. How much? How much? 4,80,000. Correct? How much will go for AC? 100 into 60%. Into what? 15,000. Correct? How much? 7 lakh? कैसे 60? नालायक. Probability of cash option 40%. ओ अच्छा देखो नालायक. I have prepared question, I have forgotten. Very good. Very good. Excellent. Ulta. First is what? 7 lakh. First is 7 lakh. 7 lakh 20,000. Please do not talk. Then what? Then how much? So answer is what? Oh, so who has said? First answer will be always wrong. Be careful, okay? It's very easy if you are not doing calculation mistake. 13 lakh 20,000. Okay, sir? Okay? Any doubt? No doubt. Then the next journal entry will be on 31st March. Once again the amount will change. So once again we'll calculate. Now cash, how much? 100 into what? 70% into what? 12,000 is equal to what? 8 lakh. 40,000. Okay, sir. AC. AC will be 100 into what? 30%. What is the fair value? 15,500 is equal to what? 4,65,000. Total is what? 13 lakh 5,000. Increase or decrease? Decrease by what amount? So what journal entry will do? Dividend payable. Account debit to what? Retained earning. How much? I think you are understanding. No doubt. Correct? बताओ. Next year 17-18. Now we'll come to settlement on 15/5/2017. Once again the amount will change. Now actual cash how much? 100 into what? 30% into what? 12,000 is equal to what? 3,60,000. AC 100 into what? 70% into what? 16,000 is equal to what? 11 lakh 20,000. Total what? 14 lakh 80,000. Increase, decrease? Now increase? Now increase? Are you able to understand? Okay. So what will be journal entry? Retain earning. Account debit to what? Dividend payable. How much? 1,75,000. Okay. Last journal entry, settlement entry you will do. Do. Settlement entry everyone do by your own. बताओ What journal entry you have done? Dividend payable how much? 14 lakh 80,000. Okay, sir. To cash how much? 3 lakh 60,000. To inventory, or you can add on purchase also. This 7 lakh means what you have done? 100 into 70% into 10,000. Very good. Excellent. But how much? Difference will be transferred where? To. I am writing PL, okay? PL. How much? 4 lakh 20,000. This is a fair accounting. You try to understand what is the, now what we are talking about. We are talking about fair accounting. Which amount should go where? Which amount should be posted where? Fair accounting. This only is the start of the FR. Entire accounting concept is going to be changed. Now write down point number 1 of this. Lot of noise is going on. I can't teach. Lot of noise. Understood? Correct? If any doubt, please ask me. Better we will discuss. What happened? You are discussing what happened. I am not able to concentrate. Profit? There is no? There is no option. There is no cash option.
You already trying to sell for them 50,000 for 20,000 fair value. Why take profit in previous year?
Please try to understand. Everyone, मेरी बात समझना. Try to understand the intention of what? What is the intention of accounting? Fair presentation. Fair, we always, whenever we write audit report, we write down profit is what? True and fair. True and fair does not mean 100% correct. True and fair means it is giving true and reasonable view of the financial statement. Understood? Correct. Now, when you have declared, it becomes your liability. It is not your revenue, your profit. When you declared, it becomes a liability. So we have recognized liability. Whether actually distribution happened, whether actually any control of inventory has been given to shareholders, you only say na. Whether control has been transferred. If control has not been transferred, how can you record profit? How can you record the profit? You only say na. If you can record profit, I will say then revenue recognition chapter you did it. Revenue recognition AS9 you have said sales will recognize when risk and reward of that goods has been transferred to the buyer. So whether the control remain with entity or owner, we have declared it. We have not distributed it. We have only declared that we will distribute. So it means risk and reward has not been transferred. Means it might happen this AC till now we do not have only. It might happen in our stock there is no AC. Can you record profit right now? You say. It might happen godown is what? Empty right now. But we have declared we'll purchase what in the next year and we'll sell. You only say.
Here I am assuming that AC is not with the company.
AC are not with the company. Okay.
Company is entering contract. That they supply AC.
Hmm.
The liability is 15,000 per AC. Now he declared this dividend for 20,000 fair value. Then how the treatment will be? That's fine.
Arey bhai, you purchase AC. You purchase AC at 15,000. You will sell AC at 20,000. Whether these two are same transaction, they are two different transactions. So we are not talking about sale, we are talking about distribution. Sale and distribution are two different words, and till now not distributed. Till now not distributed. Only we have declared. So how can you record profit? How can you record profit? You say, na? Try to understand. You have said, try to understand. Everyone, I will say in this way. Chalo. Last discussion I am doing. Any doubt then after class for this? Last point. I purchase an inventory of rupees 10,000. Okay? Understood? And I have done a meeting. Meeting is fixed. Negotiation done. Everything done. Now it will be sold. It will be sold at rupees 20,000. But how much profit I will book? You only say? Bolna. Now you are silent.
I didn't say that purchase. I am entering contract. That when the distribution is made, I will receive the XE.
When distribution made means at this point of time. At this settlement date, you receive AC. Or you receive AC. Then? Chalo, after class. I am not able to understand your doubt. After class we'll discuss. Okay? Chalo. Now, write down. I am not able to understand your doubt. Write down. Non-applicability applicability of Appendix A to IND AS 10. Point number 1. It is not applicable. It is not applicable to accounting in the books of honor who receive such a distribution. Okay? So it is not applicable in the books of honor. Point number 2. It is not applicable to distribution of non-cash asset to entity which is ultimately controlled by same party before and after distribution. Before and after distribution. Of course, second point you have not understood. It is not applicable to distribution which is ultimately controlled by same party before and after distribution. Write down, refer. Will not discuss right now this point. Refer IND AS 103 business combination. We'll discuss this there, this point. So when I'll come to IND AS 103, I will ask this point. So you will say we have forgotten. Okay? So I will do a recap there. Okay? So this IND AS 103 will come after 35 days. After 35 days. And of course, you forget after 2 days only. So point number 2. Applicability लिखेंगे it applies to following which reciprocal or non reciprocal transactions. Okay, sir. Non reciprocal transaction between whom? Between entity and owner. बताओ, first is what? Distribution of non-cash asset. Second, distribution that gives owner an option of what? Non-cash and cash asset. Alternative. Okay. Point number 3. Accounting treatment. Already I discussed. Correct? Refer above example. Correct now? And read page number 74. So read, once you read, whenever you have time. Okay? Correct? Whenever you have time, just read it. You will be able to understand whatever I have discussed. Okay? Now, everyone. Distribution. What we are talking about? Distribution. Of what? Non-cash asset. ठीक है? So can this non-cash asset can be either what? Inventory, or I will say other than inventory. Other than inventory. Correct now? So there are 3 categories. Everyone try to understand what I am saying. Distribution, inventory, other than inventory. For distribution, what is applicable? For accounting of distribution, what is applicable? Bolo. Appendix A to IND AS 10. Means inventory is not accounted as by IND AS 10. Agree? So for inventory, what will apply? IND AS 2. This is our next IND AS. IND AS 2. So on reporting date, inventory will be measured at what? Cost price or NRV, whichever is lower. And any loss need to be charged to profit and loss account. Understood? Correct? And for other than inventory, means for example, it can be PPE, it can be investment property, it can be biological asset. Coming soon, what is biological asset? We'll discuss. PPE, investment property, biological asset, etc. Which is not inventory. Correct? So for them, IND AS 105 will be applicable. IND AS 105 is applicable is applicable. So we'll discuss this point where once again. IND AS 105. Understood? So when IND AS 105 will come, we'll discuss. Once again we'll discuss. So there are three links, try to understand. I said we have done IND AS 10. We'll once again discuss where IND AS 103. And then what? IND AS 105. Understood? Correct? Any doubt? IP means investment property. Investment property. Correct? So if it is other than inventory, on that asset, what is applicable? IND AS 105 is applicable. Now what IND AS 105 says, will not discuss right now. Okay, sir? Correct? Any doubt? Point number 5. Disclosure requirement. So this is disclosure requirement of IND AS 10, not appendix. Huh? Appendix over. Point number 1. Write down. Date of approval. Date of approval of financial statement for what? Issue. So as per AS4 this was not required. But as per IND AS 10 you need to also give date of approval when it was finalized. Date of approval. And also with this, who gave approval, that disclosure is also required. Also with these, entities, owner or other who have power to amend. Power to amend financial statement after what? After issue also require disclosure. Means date of approval is required. Who has given approval, the name of that person is required. And any person who has power to amend a financial statement after issue, that is also required. It might happen with AOA, some power has been given to some person. The name of that person is also required. Correct? So this disclosure, what was not where in AS4, so it become one difference. It become one difference. Point number 2. Updating disclosure about condition existing on reporting date for adjusting event. For adjusting event, so whatever updation, whatever adjustment you have done, that disclosure is also required for adjusting event. Then point number 3, non-adjusting event if amount or what? Material. Then following disclosure. Then following disclosure are required for non-adjusting event? बताओ, what? Point number 1, nature of event. Nature of event. Second is what? Estimate of financial effect. Financial effect. In bracket item. If cannot be estimated, sorry, facts should be disclosed. Facts should be disclosed. Similar disclosure was required for what? Contingent liability also. ठीक है, but this non-adjusting event is not contingent liability, huh? Correct? Understood? Last point of this chapter. Point number 6, what? Difference between what? IND AS 10 and AS 4. You will give or I will give? Can you say? One by one. IND AS 10, AS 4. Bolo. First difference is what? Bolo. Point number 1. Non-adjusting event. बताओ. Disclosure is required where? Disclosure in financial statement. Here what? Disclosure in report of what? Approving authority. Okay, sir? Then what? Second difference. Bolo, point number B. Going concern. So IND AS 10 requires what? Fundamental change in basis of accounting if what? If going concern become what? Become invalid, right? Invalid. Become invalid. Here what? It requires only adjustment to what? Adjustment to assets and liabilities. Point number C. Disclosure. So can I say here more disclosure? Here what? Less disclosure. This is a difference for every IND AS, huh? More or less. If you do not remember, write on this though. More disclosure, less disclosure. Point number D. Distribution of non-cash asset to honor. Write down. Deals in what? Appendix A to IND AS 10. यहाँ लिखेंगे silent. Last. Breach of contract. For what? Which borrowing? Long term borrowing. You get deals. यहाँ silent. So these are the basic difference. With this we completed what? IND AS 10, but only from my point. One second, till you do all the question of book, you refer all the book, it is incomplete. That is your duty, that is not my duty. That is your duty. Book, everyone have received? Very good. If not received, get it. So you can see we have completed 3 chapters. Value added statement, you have not done revision. We have done IND AS 37, you have not done revision. We have done IND AS 10, you have not done revision. We have 40 chapters like this. 40. You just imagine if I will come to what? Last 10 days of this class, then everything will be accumulated. Everything will be accumulated. Are you getting? So please do revision. Only question, don't read the text part, don't read the notes part. Examples question, just read down, answer it down, don't also think. Just read down the answer. And just able to analyze whether the answer, whatever you should be there and what should not be there. Just itna. So when you read down, you have a confidence that yes, we have completed. We have completed. And doubt will not come. If doubt will come, we'll discuss. Correct? Bolo. Huh? Bolo. What is my approach? Ki initial days I will be taking what? Very basic chapters. Just for example, I will start with provision, already done in IPCC. Then value added statement was also very easy. Then we started what? Contingencies and event occurring after balance sheet. That also you have done. Then abhi right now I start inventory. So all basic. Once I will enter CA final, I will enter CA final with lease. Once IND AS 17 started, then you will have no time of relaxation. Are you getting? Because syllabus so vast, ki one by one, coming. And you will not understand when the syllabus is over. Chalo, we'll take break. We'll break for how many minutes? 10 minutes. After 10 minutes, you need to be here, okay? Now we'll start IND AS 2. बताओ, what is the name of IND AS 2? Inventories. What is the corresponding AS? AS 2. Only this is the AS and IND AS whose number are same. IND AS 2, AS 2. And this is the chapter which you are doing from what? CBD. Inventory. ठीक है? चलो. We'll start. Point number 1. Meaning. बताओ. What is inventory? Everyone. Inventories are held for sale. Only this. In the ordinary course of business. Any more? चलो. बताओ. Inventories are assets. Inventories are asset. बताओ, what is the meaning of asset? Asset means what? So, give one star mark on asset. But what is the meaning of asset? Which gives economic benefit and controlled by the entity. Of course, you have done this definition. But what is the meaning of control? Huh? Control of utilization means what? Yes, very good. Control means what? It can be used by the entity and they can also restrict other person to use it. Then only control will come. For example, this is the building which I have taken on rent. So can you say this can be used but I can't restrict other to use it. Therefore it is not my asset. This is not my asset. Are you getting what I am saying? I can't restrict owner. Have you understood this point? So this is not my asset. But if I have taken an asset on finance lease because you have done AS 19, so in case of finance lease, all the risk and reward has been transferred, even though ownership is not transferred. So entire control is now with whom? Who? Lessee. Similarly, in case of hire purchase also you have done. In case of hire purchase, even though it was purchased without transfer of legal ownership, but control belonged to whom? Vendor or buyer? Buyer. Therefore, you write down one entry asset account debit in the books of hire purchaser. Understood? Correct? So, inventories are asset. So, when we say asset, there are two conditions. One is control. One is future economic benefit. So if these two conditions are satisfied, we call it an asset. Okay? So inventories are asset which are point number A, held for sale in ordinary course of business. Ordinary course of business. Point number B, which are held where? In the process of production. You know what? WIP. And point number C, which are held in the form of what? In the form of material or supplies to be consumed. Where? To be consumed where? In the process of production, process of production, or what? Rendering of services. Correct? So we are talking about raw material. Correct? Now let us understand each and every term. So you have understood asset. Asset means any resource which is controlled by entity and which will give future economic benefit to the entity. Correct? No doubt. What is the meaning of what? Held for sale in what? Ordinary course of business. Ordinary course of business. Now what is the ordinary course of business? Are you agreeing? What is the ordinary course of business? Can I say we can have more than one activities which are ordinary course of business. Let us take one example and let us understand whether it is ordinary course of business or it is not an ordinary course of business. Correct? Let us take one example. This is a question of CA final. Come to page number 105, question number 1. 105, question number 1. Okay? Let us read this question. Night Limited. There is one company, Night Limited. They work only in night. Sales what? Beer. You know beer? Huh? I also don't know. So Night Limited sells what? Beer. To whom? Customer. Some of the customer consume the beer in the bar. We have only ghar and bar. So some of the customer consume the beer in the bar run by Night Limited. While leaving the bar, the consumer leave the empty bottle in the bar. Of course, they will not take. The consumer have leave the empty bottle in the bar and the company take possession of this empty bottle. So now these are under the possession of. So can I say this is under the control of entity? Under the control of entity, because customer will not come back and ask, give my bottle. They will not come back in the morning now. Are you getting what I am saying? In morning when my bottle is left there. Chalo. The company has let down a detailed internal record procedure for accounting for this empty bottle. Detailed internal record procedure. So when I say detailed, means the amount is not immaterial. The amount is material. From this it is understood. Detailed internal record procedure for accounting for this empty bottle which are sold by company. Which are sold by company. Means these are held for sale. Which are sold by company by calling for tender, keeping this in view. So they call tender and sell it. Keeping this in view, decide whether the stock of empty bottle is an asset of the company. Yes, first they have asked whether it is an asset. Yes or no? Yes. Why? Control and future economic benefit. If you are adding these two words, then only they will give marks. So you need to define asset means any resource which are controlled by entity and which will provide what? Future economic benefit. So because this is the case, it is an asset. Okay? No doubt. Point number 2. If so, whether the stock of empty bottle existing as on balance sheet date is to be considered as inventory of the company and valued as by IND AS 2 or to be treated as scrap and shown at realizable value with corresponding credit to other income. Means they are saying whether it should be classified as inventory or it should not be classified as inventory. Batao. It is inventory, it is not inventory. Huh? It is inventory, it is not inventory. Huh? Not an inventory? How many are saying not an inventory? बोलो. Why not an inventory? Who said this is not the main business? Where it is written? Nanas, where it is written? Shh. Who said it's not the main business? Everyone try to understand. Ordinary course of business does not mean main business. First point is, I have not said ordinary means main. Are you getting what I am saying? Have you understood? Ordinary does not mean main business. For example, we are into coaching services. Are you getting? We are into services, but we also keep some what? Pen also with us. That anyone who forget the pen, you can purchase from here. Are you getting? So that is not my main business. And also I give at what? 1 rupees profit only. 1 rupees profit. Intention is not to earn profit. But whether it is my main business, not my main business. But I can say it is incidental to my business. It is related to business. Can I say this happens because of what? My main activities. Are you able to understand? And this is not what? I will say it is not a non-recurring activities. It is recurring activities. We can't say it happens only once in a blue moon day. Are you getting what? It's not. It happens every time customer will come and they will leave what? Empty bottle. And this is not a immaterial amount. It is a material amount. So can I say it is held for sale in ordinary course of business only? So what is the meaning of ordinary course? Ordinary course has not been defined in what? IND AS. But we have done one AS5. AS5, if you remember, they have defined ordinary activities. However, IND AS does not deal with this. But what AS5 used to say, कि ordinary means what? Business, your business, and any activities which are incidental to business. Incidental to business. Both are what? Ordinary. So can I say, you can say, of course, sir, it is not our business, but it is incidental to business. So whatever you do, which is incidental to business, is also what? Your ordinary course of business. Are you able to understand? Amount should be material. If the amount is immaterial, then no AS, no IND AS is applicable. No AS, no IND AS is applicable. Therefore, it is an inventory and IND AS 2 will be applicable and should measure at cost price or NRV, whichever is lower. Now one doubt will arise. Doubt is what? Sir, there is no cost price. There is no cost price. But there is an NRV. There is an NRV. So what we should do? Practical. This is not an solution part because they have not asked. Cost price is 0. NRV might be what? Some amount? NRV suppose 1000 per bottle. 10 rupees per bottle. Okay? 10 rupees per bottle. Are you able to understand? Then can I say it should be recorded 0? 0. So it will be recorded at 0, but for recording, we write down at nominal value. We write down at nominal value. Are you getting? For example, rupees 1 per bottle. Rupees 1 per bottle. Are you able to understand? So from this answer I am giving from practical point of view. In exam they will not ask this point. So practically we will write down this inventory. Under the head inventory, empty bottles, at what nominal value? At nominal value. Have you understood? Correct? Understood? So it is an ordinary course of business. Therefore, IND AS 2 is applicable. IND AS 2 will be applicable. Any doubt? No doubt. Now, held for process, in the process of production, no discussion is required. Okay? Held in the form of material or supplies to be consumed in the process of production or rendering of services. For example, I am providing services, so I might use marker pen. So for me, for my business, markup pen is what? Inventory. Because I am consuming it for what? Rendering of services. For example, I purchase 1000 marker and at year end 200 marker is not yet used. So that is my inventory. Need to be written as inventory where? In my balance sheet. It is not PP na. Not fixed asset. It's not fixed asset. So it will be my inventories. So in the course of providing services, we also use what? Some inventories. Okay, so that are material supplies. But write down a note. What actually material or supplies means? Now we all know that there are two types of material. One is what? Direct. One is indirect. Direct, indirect. Okay, sir? Now direct, no doubt, it is raw material. So for raw material, IND AS 2 is applicable. IND AS 2 is applicable. Are you able to understand what I am saying? For direct, IND AS 2 is applicable. Question arises for indirect material whether IND AS 2 will be applicable. Yes or no? Yes or no? Yes. But this indirect material are of two types. One is related to what? Production. One is related to what? Distribution. Distribution. Are you able to understand? Production means there are some packing material used for what? Production also. There are some packing material used for what? Distribution also. So for this production, whatever used for production, for that IND AS 2 is applicable. For this IND AS 2 is applicable. For this IND AS 2 is not applicable. Because material supplies to be consumed where? In the process of production. Whether direct or indirect, both will come. Whether direct or indirect, both will come. Have you understood this point? Any doubt? Bolo. Any doubt? Correct? So any packing material which are used for distribution purpose, for that IND AS 2 is not applicable. For that IND AS 2 is not applicable. Any doubt? No doubt? No, that is what? When you consume, you need to charge it to profit and loss account. For this IND AS 2 is not applicable, means it will be recorded at what? Cost price. It will not be shown at what? Inventory. This is not my inventory. Other current assets. The stock is there. It is not inventory. It is not inventory. Are you agreeing? That will be other asset. There are many heading. Go to that heading, write down. Understood? But it will not be where? Inventory. It is not inventory. Understood? Bolo. Because written what? You all listen now. Material to be consumed where? In the process of production. Not in the process of distribution. In the process of production. Not in distribution. Understood? Correct? I am giving all point, all aspect. Whether it is relevant, not relevant from exam point of view. Correct? Understood? Point number 2. Thoda fast now because this is very easy. Valuation of inventory. One minute. Just raise your hand, I will see and I will come to you. But the valuation is done on which date? On which date? On reporting date. On a reporting date. Before coming to your doubt, my question to you all. I have some doubt. Now, we say that inventory is valued at cost price or NRV which are lower. This is, from Bachpan. I'm not focusing on that. But when I say cost, one cost is related to costing subject. Cost, you have done costing there also. In costing you have done a cost price. Entire costing subject related to inventory only. Most of the time you are related to inventory only. The cost. And right now we are talking about cost. My question to you all, the cost price, whatever you have calculated in costing subject, and the cost price, whatever we are calculating in what this in accounting standard, are same or different? Are same or different? Both are same or different? Different. How and why? You said different. That is budget. Very good. Excellent. One word means you know. That is what? One estimated cost, and that cost is from the point of view of determination of sale price. Means when we determine sale price, so to determine sale price we determine before business started. So we need to estimate cost price. On that estimation, we add some profit, and that become our sale price. But whatever cost we are calculating, that is on reporting date, means on the basis of actual information. On the basis of actual information. So costing subject, cost price, cost price, and cost price, whatever we are dealing right now, are different. That is estimated. This is what? Actual. This is on the basis of actual information. On which date? On reporting date. On reporting date. Now your doubt. Huh? अच्छा उसमें चलो if you have asked so I will deal because now at the time of production you can write down there are two type 1 second subcategory. One is primary. Without this what? Sale is not possible. Primary. One is what? Secondary. Means suppose you purchase one mobile, then what happens? Some packing is required. That is primary. That become primary. But when we'll do what? Suppose we'll do not distribution to customer. From one warehouse from factory to warehouse, we'll do what? One carton packing. All the mobiles will be in that carton. Are you getting? So that carton is also packing material, but that is secondary. That is what? Secondary. Are you getting? So one is primary, one is secondary. You only say what is related to what? Production. Primary is related to production. This is what? IND AS 2. This is what? Not IND AS 2. Means right now I'll come to one component of cost. What this is? Cost price means what? Those costs which are required, which are incurred to bring the inventory in condition of sale. So only primary packing material is used for what? To bring the inventory in condition of sale. Secondary packing material is not required. So you can subdivide it. Very good. Chalo theek hai. Okay. My mistake I have not discussed. The production you can do two. One is what? Primary. One is what? Secondary. So for primary what will be applicable? For primary what will be applicable? IND AS 2. For secondary what is not applicable? IND AS 2 is not applicable. Understood? Very good. Every doubts are important. Understood? Correct? Can I start? Valuation? So valuation is what? Batao. Lower of. It will be valued at lower of what? Point number A, cost price. Point number B, net or realizable value. Now we need to understand what is cost price, what is NRV. Write down point number 3, cost price. In this write down point number A. Component of cost price. So when I say component means what are included in cost price. Included in cost price. Included in cost price. Okay? Component means what are included in cost price. So write down, there are 3 parts. Point number A, cost of purchase. Cost of purchase. So what is the meaning of cost of purchase? Cost of purchase means what? Invoice price. Invoice price minus what? Minus trade discount or or a rebate. This all point you know. Whether any discussion required. Plus what? Non-refundable duties and taxes. Correct? Means can I say, it means credit is available or not available? Credit is not available. Correct? Plus all direct expenses to bring inventory. Where? To bring inventory in present location. Present location. So this become cost of purchase. The first component. Cost of purchase. Cost of purchase. Correct? Understood? So cost of purchase means invoice price minus trade discount plus non-refundable duties and taxes plus direct expense to bring the inventory in present location. For example, insurance in transit. For example, loading and unloading charges. For example, you also know. Octroi. There are many examples. You have done many examples, you know. Correct? Understood? Now, when I say cost of purchase, so what we can purchase? Can I say we purchase either raw material or what? Stock in trade. Means we are talking about direct material first though. यहाँ पर. We are not talking about indirect material. Means I am not talking about packing material. We are not talking about packing material. But can I say we can be either in manufacturing or trading? So if I am manufacturing, this is what? Purchase of raw material. If I am in trading, then it is purchase of stock in trade. Are you getting what I am saying? So either we will purchase what? A raw material or we purchase what? Stock in trade. Can you say if I am doing trading, then cost price is nothing but cost of purchase? No other cost will be added. But if it is raw material, then what will be added? Cost of conversion will be added. Have you understood this point? Correct? So this is the cost of purchase of raw material or what? Stock in trade. And if we are doing manufacturing, we need to add what? Cost of conversion. Write down point number B. Second component. Cost of conversion. So bata, what is the cost of conversion? Bolo. Point number A. What? Direct labor cost. Direct labor cost. Now, you know direct labor. I am not expert, you are expert in direct labor. So I am not defining these terms. Already you have done in costing. Direct labor. Then what? Point number B what? Bolo. Production. Production what? Overhead. Production overhead. What is the meaning of production overhead? When I say production overhead, means what? Direct material, sorry. Indirect material. Sorry. Indirect material, indirect labor, and indirect manufacturing expense. Indirect manufacturing expense. Correct? Indirect manufacturing expense. So these are what production overhead. Indirect manufacturing expense means repair and maintenance of plant and machinery. Repair and maintenance of plant and machinery. So I am not giving example because you are expert in this. Okay? And IND AS 2 does not deal with examples. Correct? So these are the component. I am dealing only with component. The production overhead is the component of what? Cost price. Okay? Now there are two type of what? Production overhead. One is what? One is what? Variable. Can I say variable overhead will be allocated to each unit to each unit on what basis? On actual production basis or normal production basis? Very good. Will be allocated to each unit on actual production basis. Correct? Because it vary according to what? Actual production. Very overhead. Second is what? Fixed overhead. But this will be allocated in which basis? Will be allocated. Will be allocated to each unit on what basis? On actual production, normal production? Huh? Actual production or normal production, whichever is what? Whichever is higher. Whichever is higher. Can you say normally normal production will be only higher? In a rare situation, actual production will be higher. Are you getting? Normally, normal production is always higher than what? Actual production, because we are always inefficient. Because we are always inefficient. Are you getting? Suppose I fix that in a day I can teach what? 10 hours per day. 10 hours per day. Are you getting? So that is my efficiency level. And can I say, I cannot work out above my efficiency. If I am working out about my efficiency, my quality will decrease. My quality will decrease. So normally, I will work either at what? 10 hours or what? Below 10 hours. Are you able to understand what I am saying? But in a rare situation, it might happen I am also working more than 10 hours. Then what to be done? Means there are three circumstances. Actual production, normal production. Actual normal production is 10,000. 10,000. 10,000. Actual production can be what? 10,000. Or what? 8,000. Or what? 12,000. So in this case, Bata, what will take first situation? On what basis? 10,000. Second what? 10,000. Third? 12,000. Okay. Means if my fixed overhead is equal to 1 lakh, if my fixed overhead is 1 lakh, but what is my fixed overhead per unit? What is my fixed overhead per unit? So it is per unit how much? 10 and what? 10, 10, then what? 8.33. 10, 8.33. Are you able to understand? Correct? Means in the first case, how much is recovered from customer? Batao. How much is recovered from customer? Batao. 1 lakh you have recovered? 1 lakh. Means you incurred 1 lakh, you recover 1 lakh. In second case, how much you have recovered? 80,000. Bole yes or no? So 8,000 was the actual production. You can recover what? 80,000. So 20,000 is normal loss ki abnormal loss? 20,000 is normal loss ki abnormal loss? Abnormal loss. Therefore it cannot be recovered. It will be charged to what? Profit and loss account. You have done in Bachman? Abnormal loss will be debited to profit and loss account. So you can recover only how much? To the extent of 80,000. The balance will be charged to profit and loss account. In the last situation, but how much we are recovering? 1 lakh. Have you understood? Correct? Understood? Any doubt? And believe me, in this first attempt of new syllabus, they have asked 5 marks question on this. 5 marks question on this. Means nothing is what? Not relevant. Everything is relevant. Everything is relevant. This is an IPCC level question. They have asked 5 marks question on this. And believe me, suppose you have not done revision, or this point is not actually written at the time of exam, 5 marks gone. Very simple point. But what happened on exam day, whether you are able to react? That reaction will come only when you have done you have done in class and you have done revision also. Are you getting? Correct? So they can ask question from any topic. 5 marks question, new syllabus, they have asked question from this topic. It means all IND AS are important from exam point of view. All IND AS are important from exam point of view. I think you have understood, but correct? Any doubt? Have you written this? No doubt? Come. Next point. So we have written what? Cost of conversion, direct labor cost, production overhead. Now write down point number C. A was what? Cost of purchase. B is what? Cost of conversion. What is C? Other cost. Other cost means cost incurred to bring inventory in condition of sale. In condition, not for sale, in condition of sale. Are you getting what I am saying? Means I am not talking about selling and distribution expenses. So any cost which is incurred to bring that inventory in condition of sale, that will be also included. For example, what? Primary packing material. Okay. Second is what? Transportation cost. Transportation cost from what? From factory to warehouse. Not from warehouse to customer. Have you understood this point? Or you can write down one more example. Modification cost. Modification cost. Some customer always want to modify. For example, I am a dealer of furniture and they can please do some modification. So that modification cost, whatever we have incurred, that is also to bring the inventory in what? Condition of sale. So any modification cost will be also added. Understood? That is as per some specific customer. Customer specification cost. Understood? Okay. So these are the component of cost. So I have written what? Point number A. Point number A ka small a, B, C. Now written point number B. Big point number, capital letter. B. What are excluded from cost price? Batao. Point number 1. Administrative expenses. Point number 2. Selling and distribution expenses. Point number 3. Abnormal loss. Point number 4. Storage cost unless what? It is necessary for what? Production. Storage cost unless it is necessary for production. Means storage cost of raw material will be included. But once the goods are produced, finished goods, if you are storing that and any rent you are paying, that is not included in the cost price. So storage costs are not included, but if they are necessary for production, then included. Have you understood this point? Point number 5. Borrowing cost. But write down subject to IND AS 23 means AS 16. Because you know AS 16 I can write down. It means what? If inventory is a qualifying asset, you know. If inventory is a qualifying asset, include or exclude? Include or exclude? Include. If inventory is not a qualifying asset, excluded. Now we'll discuss this point when? IND AS 23. Correct? Can I ask one question? Only a recap I am doing. I am trying to cover all the points. Nothing more than this. Can I say in this way? In simple word. Whatever excluded, that is debited to PL account? Bole yes or no? And whatever included, debited to what? Manufacturing and trading account. Now we don't prepare manufacturing account, trading account and PL account separately. But in Bachpan CPT we used to prepare. We should sometime go to past and think about our past. Yaad karo manufacturing account, trading account and then PL account. You remember? So can I say in this way, कि whatever expenses which has been debited to what? Manufacturing and trading account are what? Included in cost price? And whatever debited to what? PL account are not included in cost price. That is excluded from cost price. Is it correct? Can I ask one question? Okay, don't shout. Raise your hand. Yeah, I will. You will shout only. Very simple question. But dekhna, one doubt will come. Whether depreciation should be included or excluded? Depreciation should be included or excluded? So, included or excluded? How many are saying included? Included? How many are saying excluded? So what others are saying? Arey, kya hai? This is a very simple question I'm asking. No, this is not fair. Huh? This is not fair in the class. Please, if you are thinking like this, I will never raise my hand. What others will think about me if I'll give wrong answer. This is not correct. Please, you need to participate. My first mantra was participation. And believe me, you love my class, you will participate. Please react. It will help you. 1 second, batao. Depreciation included, excluded? How many are saying excluded? How many are saying included? Included, excluded? Excluded? Included. आपके पहले वाला. You are also not raising hand. Why? 1 second. Last time I will watch you only. Otherwise I'll come and I will hold you and I will raise. Now don't say me. Please. Now, how many are saying depreciation is excluded from cost price? No, I'm seeing many hands. And how many are saying included? Included. Means those who are saying excluded, they are 100% wrong. And you have not done costing. It means you have not done costing. You came here without the knowledge of costing. Costing I'm not saying about CA final. I'm saying about what? IPCC level. And in costing that we do not have in CA final. We have what? What is the name? New name? I also don't know. SCM. जो भी है. पता नहीं कुछ मैनेजमेंट है. अरे वाह. देखो, what I am saying in my class, it means I will clear all the basic concepts also. Depreciation can be included if it is directly attributable for the production activities. For example, if I am using plant and machinery for production, the depreciation is a part of production overhead. And production overhead is included. Depreciation of plant and machinery which are used in production activities will be included in the cost price, but depreciation of furniture will not be included because that is not used in production activity. Understood? Correct? Means when you write depreciation in PL account, that is actually wrong. All depreciation will not come in PL account. In CPT, the teacher has taught you wrong. Even I teach wrong in my class because that is a part of ICAI syllabus. ICAI says charge to PL. We say charge to PL. 1 mark question, depreciation debited to which account? PL. They don't give trading PL both. Are you getting what I am saying? So we will teach as per ICAI requirement. But that is 100% wrong. After costing, so you should have a knowledge about this. Depreciation can be a part of cost price if it is related to what? Production of inventory, whatever. Understood? Write down this note. Otherwise you will. And this is an interview question asked from one of my students. In interview they will ask this. They will not ask what is cost of conversion. Where they will ask cost of conversion. They will ask this type of question in interview. अच्छा एक बात बताओ, एक three please. You become, I'm just asking one question. You become CA. One of the, I will say, most important day of your life and most happiest moment of your life. Because I also remember when I become CA, I was so happy. I don't know, but I'll say you about my story. I was not happy. Why I will say? First, can I say it will be one of the happiest moment? Bole yes or no? Happiest moment. But you gone to interview, and in that interview you are rejected. But the first thing, if you are a chartered accountant, what I think, nobody in this world can reject you. They have no right to reject you. This is my question. They have no right. Because once you become chartered accountant, you are 100% knowledgeable chartered accountant. Because it is not easy to pass what? CA. And if somebody is rejecting you, they have no right. And if they are rejecting, we should blame ourselves. And I will say you are not chartered accountant. This is a fact I am saying. If somebody is rejecting you, you should slap him. You have no right because ICAI has given a clarification that we are chartered accountant and we have come here for a job of what? Chartered accountant. So they should not have any right. Bole yes or no? But if you are rejected with this, you need to think that till now you are not chartered accountant. Even though you have what? Certificate. But of passing CA and rejection, better don't pass. I will say. Better don't pass. This will you realize when rejection will come. You will not feel right now. Becoming CA and try to understand, suppose average salary of a chartered accountant which I feel right now should be more than 10 lakh per year. As per my point of view, average salary should be more than 10 lakh. But if you are getting a job of 3 lakh, why you have done so much pressure to become and get a job of 6 lakh? So passing CA does not mean becoming CA. So we should give exam for becoming CA, not for passing CA. First point, always try to understand. Everyone pass CA, but everyone is not getting that amount of salary. Why they are not getting that amount of salary? Because of some limitation we have. We have some limitation that we need to understand. So what I am saying, passing is one objective, but becoming CA is the final objective. So always think about that part. Always think about that part, and that will only come when you do this type of discussion. Discuss among yourself. What is this? What is this? What is this? Why, how? There are 3 points. What, why, how. If you ask this question, you will become CA. Okay? And if you are only doing what to be done, then only what? This is exam point of view. You can pass, but you are not chartered accountant. Have you understood? Have you understood this point? Write down. Depreciation. Depreciation on depreciation of fixed asset. Depreciation of fixed asset. Fixed asset will also include intangible asset. Okay? Are you able to understand? I am talking about tangible, intangible both. So depreciation of fixed asset which are engaged in production activities, are included in cost price. Understood? This point also you have understood, bolo? Correct? Any doubt? Are included in cost price. You can write down depreciation of plant and machinery. Okay? Point number 4. Write down. Special case. Point number 1. Joint product and byproduct. Now 1 second. Very simple point, because there was one chapter on this where? In costing. You are expert than me. Look, I'll just give a rating. Joint cost is allocated to each product on the basis of what? On the basis of? On the basis of what? Sales ratio of each joint product, either point number 1 at the time of what? At the time of split off. You remember? At the time of split off, or what? On completion of, or on completion of production. Which one is preferable? Preferable. Okay? I think in costing you have done more than this method. You have done 4 or 5 methods. But other method are bakwas. I think IND AS 2 has discussed these 2 methods only. The sales value of each product at a time of split up or on completion of production. So when we are in costing subject, so that is okay. But as per IND AS, either these or these. Okay? I think no discussion required for this. Any discussion required? Point number B. Byproduct. If the amount is immaterial, it must be measured at what? It must be measured at NRV. and deducted from where? And deducted from cost of main product. Correct? Have you understood? Means, can I say byproduct means always immaterial amount? Means, if I say in this way, in a production process, there are A, B, C, D. You intended to produce this. Everyone. You intended to produce this. The intention was that you will produce A and B. But in the production process, also what is produced? C and D. Are you getting? C and D. It can be a possible situation. For example, crude oil. There are many products, kerosene, etc., etc., etc. Correct now? Then, of course, this is material. This is material. But the C is also material and D is immaterial. My question to you all, A is what? Joint product, byproduct. B, C, C is what? This was, there was no intention. It is what? Joint product. And byproduct will be what? Only D. Because if the amount is material, then it is what? Joint product. It cannot be what? Byproduct. So byproduct means amount is immaterial. Have you understood? Insignificant amount. Insignificant amount. So even though you do not have any intention to produce, but the amount is material, then this will be what? Product. For example, if I say buttermilk, which is produced from what? What? Milk. While the production of ghee. So that buttermilk for Amul industry is what? Material. For Amul industry, they are selling what? Buttermilk now. So that is produced during the production of what? Ghee from milk. So that is also material. So that is not byproduct. That is what? Main product for that entity. Have you understood this point? Are you able to understand? So this clarification I have given. Even though there was no intention, it can be what? Joint product. So we will allocate joint cost among these. So the total joint cost will be allocated in this A, B and C. And the NRV will be deducted from what? Joint cost. The NRV of D will be deducted from joint cost. Have you understood this point? Bolo. Any doubt? Any doubt? One question, must do question hai that you will do. Question number 18, page number 114, must do. This is an IPCC question, very good question. Let's see whether you will be able to do it or not. Okay? Must do. When I say must do means I will also do in the class. I will do it in the class. But you try first. Okay? Understood this point? Joint product. Have you understood? Then point number. Special case we are doing. Point number 1 done. Then point number 2. Deferred settlement terms. This is a new point which was not in what? AS. Deferred settlement terms. Everyone. Try to understand what I am saying. React like chartered accountant, okay? Can I say, when we purchase, there can be two situations. Either cash or credit. Okay. Can I say, when we purchase cash, so they will charge always normal price, not higher price. Correct now? Are you getting? So they will charge from us normal sale price. Suppose it is equal to rupees 1000 per unit. 1000 per unit. Now, whenever we purchase on credit, there can be two situations. One is credit period is equal to normal credit period. Normal credit period means every business will give such credit period to all customers because it's normal in that business. For example, in our business we give what? Till the expiry of what? Coaching. Even though you are not paying, will not stop you. Are you getting what I am saying? Because our relationship is like this. Our relationship is like this. Are you able to understand? But pay, please. Understood? So, what I am saying? But normally what happens, the credit period is always decided. Suppose 15 days. My question is that, if suppose we are giving normal credit period, what will be my sale price? Whether it will be 1000 or more than 1000. 1000 or more than 1000. It will be 1000 only. Because if you charge extra, no one will come to you. So in a business, this is what custom of trade, everyone is giving 15 days, so they will not charge higher from you. Are you getting what I am saying? But if credit period is more than normal credit period, they will charge extra or not? They will charge extra. So of course sale price will be higher than 1000. Means let us assume 10% and 1100. Suppose you have taken a credit period of 1 year and 10% is the interest rate. So they have done 1000 to 10%, 1100. Everyone try to understand what I am asking. But what happens normally in a business? Even though they are charging some interest, in the invoice, they will write down sale price 1100. They will never give a breakup that sale is 1000 plus interest 100, because if they will write 100, that customer emotion will be what affected. He charging interest from me. I will not come back again. Even though that customer also know charging extra, but interest element is na thoda sa what dukta hai. You charge high, but don't write interest rate. Don't write interest. Are you able to understand? Believe me, this is the what I will mentality. For example, everyone try to understand this. All this branded companies, what they do? The normal price is 1000, but they write what? 2000 and 50% discount. This is main sentiments. 50% discount are giving. Believe me, I am saying what is right. But Big Bazaar, they are selling vegetable. And what? Bahar mein, there are some vendor also, they are selling vegetable. The vendor outside Big Bazaar, they will write 50. They will write 50 per whatever, per kilo, I don't know, whatever. And the Big Bazaar will write down 60. Are you getting what I am saying? They will write 60, but they will give some offer. They will give some offer. And we think this quality is also good. We'll go to Big Bazaar, will not ask discount. But we'll go to this person. We'll ask what? We'll do whatever we can do. I don't do, but I know who do. Mother, छोड़ो नाम नहीं लेना. My wife, तो पता नहीं 1 rupee to दे भाई. Just give me. This is what only. Can I say, even though these are higher charges, my wife will never ask what? Discount. Are you getting what I am saying? So, sentiments. Will not write what? Interest. Now question arises, when you will do accounting. The accounting should be what? Badao. You purchase inventory, what should be the accounting? What will be the purchase amount? Means what will be the cost price of inventory? 1000 ki 1100? 1000 ki 1100? It should be 1000 ki 1100? 1100, 1000. How many are saying 1100? 1100? Huh? 1100. Invoice is 1100 and they have written credit period 1 year. And they have not written discount, anything they have not written. They have not, discount, not interest. They have not written interest 10%. Nothing is written. But they have written credit period how much? 1 year. Batao, what should be done? 1100, 1000. How many are saying 1000? 1000. Now 1000 is correct because we don't do accounting as per agreement. We do accounting as per what? Substance. Substance. What is the substance of this transaction? Try to find out reality of this transaction and break it. This is accounting right now. What is the substance? If the credit period would have been only 15 days, the same goods would have been purchased at rupees what? 1000. Means extra amount you are paying not for inventory. You are paying for what? One type of loan. You have taken from whom? That vendor. And you are paying interest at a rate of what? 10%. So this 100 will be interest. This is IND AS. This is IND AS. Entire accounting is going to change. Means of course as per AS we used to pass purchase account debit to what? Cash or bank. Maja aata tha 1100 mein. But now no. Now purchase account debit, interest account debit to what? Cash or bank. Separate it. As per the intention of the transaction, as per the substance of the transaction. Have you understood this point? Bolo. Have you understood? Write down. Write down. If inventory purchase on deferred settlement terms. Whenever we use this word, it means credit period is more than what? Normal credit period. Then cost price of inventory will be equal to purchase price for normal credit terms. And so if this is not known, normal credit term purchase price is not known. Are you getting what I am saying? However, it will be known. If not known, then we'll do present value of all what? All future payment. Future payment means interest will be equal to deferred settlement amount means future payment now. Future payment minus present value of future payment. Present value of future payment. And this interest will be what? Recognized as an expense. Will be recognized as an expense over the period of what? Over the period of credit, and will not be included where? Included in cost price of inventory. Very good. In cost price of inventory. Have you understood this point? Correct? New point, difference. So of course expected. That is one example. A Limited purchase inventory at 60 lakh on 1/4/2016 on 2-year credit, which is more than what? Normal credit. Even though not written 2-year, nobody will give. More than normal credit is 60 lakh. Okay? Rate of interest for similar transaction is 10%. Calculate cost price of inventory. So in this question I have not given you what? Purchase price at normal credit term. So if I have not given purchase price at normal credit term, so you need to find out what? Normal interest rate for similar transaction. Okay? So can I say we can do now? So solution, what is the cost price of inventory is equal to what? It is 60 lakh multiplied by what? Multiplied by what? 0.8264 is equal to what? 49 lakh 58,000. I am writing 400. चलेगा? Okay? 400. Okay? तो बताओ. On 1/4/2016, what journal entry you have done? बताओ. Purchase account debit how much? To creditor how much? 49,58,400. Creditor will be what? 49,58,400. Entire accounting change. 60 lakh, no recording now. We should write purchase to creditor 60 lakh. 100% wrong accounting. Change in approach. Okay. Now, at year end what we'll do? 31st March 2017, bolo. Interest account debit to what? PL. But how much? 4,95,840. 4,95,840. Bolo, correct? Then what? This will be charged to PL. The next year, 31st March 2018, interest account debit to what? Creditor. Can you give me the balancing figure? Because it should be equal to 60 lakh. 5,45,760. 5,45,760. And suppose on this day it is paid also. तो creditor account debit to bank how much? 60 lakh. Have you understood? Bolo. Have you understood? This you understood? Easy? IND AS 115. Example number 2, homework. Sunna. Everyone. Suppose in above question, normal purchase price is equal to 49 lakh 58,400. How you will calculate interest expense. Understood? Let's see. You have understood what to be done? Now I have not given rate of interest. I have given what? Normal purchase price. Same question. Dekho, I have taken this price only. This price I have taken. Correct? So you need to first find out 10%. How to find out that 10%? Can you do by your own? What you will apply? Present value without rate of interest. Homework. If you can do, I will assume you are good in FM. I have given hint. Apply FM concept. Apply FM concept. Okay? Homework. Think, do by your own. Think, do by your own. Okay, sir? Okay? Chalo. Thank you very much. We'll meet tomorrow.